Mutual fund is like a tunnel for becoming rich. Do you really think that? I don't think so. How many people have you seen becoming rich through mutual fund? One, two, in my case, zero. Literally zero. Why I told this? You will know at the end of this video. What managers handles your money, who literally grow your money. So there's a low chance that your money will be like in loss. Diversification is like money in all the sectors like debt and equity. SIP, it's like you're putting your money every month in a fund every month. Okay, weekly, monthly, quarterly, it's your choice how you want to do SIP. You can do. If you can add your lump sum money also and you can do SIP is better choice because you will buy the stocks every month. If the market is high, you will buy. If the market is low, you will buy. So it will balance your money. And the in lump sum, there's no chance. If you buy at high, then you finish. If the market crashes, your money will be over. But you buy at low, the market goes up, profit. Okay, now comes the risk. If the manager who managing the fund, if he did something fishy, the fund will be closed and your money will be vanished on the spot, and there is no security for your money. And the second, cost. Like in mutual fund, the cost is very important. Like expense ratio, you have to see expense ratio properly. Like if they charges 1%, it's like you are investing 1 lakh and 1000 is gone for only for expenses. Expenses is like the manager's salary and that company fees, like company management, like that kind of things. Okay, maintenance, that kind of, they will charge like expense ratio.